clients have been able to kind of cruise for a while with the market going up and not too many volatility spikes. But now we're having record days every day, it seems like, because people need now to be a little bit more nuanced in the strategies that they're doing. And ORATS could really help them with that. We have a number of backtesting tools. They can look at the strategies that they've developed or that they're trading or developed on ORATS to trade. And then they could use certain signals or our proprietary indicators in order to develop timing on when to get in and when to get out. It's not something that you could just be in the whole time, and you need to get out at certain times. When volatility starts to spike, we have some very sensitive indicators. And that, used with some other of the strategies, makes it a lot better for customers to manage their risk and have better returns.
How has the growth in retail participation affected ORATS?
We've changed our APIs to be very user-friendly. You could basically plug in a URL into a web browser and get data. So it's very easy for retail or any quants really to be able to get the data from ORATS. And that's how we've differentiated ourselves. Many of our friends and competitors that have worked with institutions, streaming data, WebSockets, more difficult implementations. We've gone to a simpler implementation, cloud-based, so people can access the data relatively easily. And that's led to a lot of our success in the retail segment for ORATS.
What risks and opportunities do you see with zero DTEs?
It's been very interesting, and we use our proprietary analytics to really monitor what's going on in the market. One of the things that I've talked about since the onset of zero DTEs that were complete in May of 2022 is what happens. I'm an ex-market maker, so what happens to the market making community? And I always thought it was going to be very helpful for them, because typically market makers are short puts, so they have to raise the price of puts, and they're long calls because everyone's overwriting calls. But what happens with zero DTEs is there's a lot more participation that's selling puts to them. And so and we see this in the put call skew. So we saw that coming down almost immediately after May of 22, when a lot of people were able to start a business in trading zero DTEs. And so we can monitor that. And interestingly enough, when we see a lot of volatility in the market, we see the opposite happening. They are less likely, retail and people that are trading zero DTE are less likely to sell puts, and so the market makers raise the skew back up on the puts. And interestingly, in the state of the industry, Henry Schwartz showed a slide that I think blew me away. It was the hours of the day or the minutes of the day and when trading occurred. And you could see spikes at the top of the hour, 10 a.m., 11 a.m., 12 a.m. And, I and another service provider from Option Omega were really laughing about that, because we do a lot of back testing where we test on the top of the hours, and our clients are like, mimicking that. So they're trading at 10 a.m., 11 a.m., 12 a.m., not 9:59, so we have to go back and talk to our clients more about, don't trade necessarily right on the top of the hour, even though that's where our back tests are coming from.
How are you different from competitors?
The ex-market maker and I backed traders, and we developed these methods for summarizing the skews. And like I talked about earlier, we could really tell what's going on in the market. So we have hundreds of proprietary calculations. And now what we've done is we've married our back tests, and we've run 275 million pre-canned back tests for people. And then a user can pick from those and then bring them over to our proprietary calculations and be able to see, as we talked about before, when to get in and when to get out. And we have p-values and good statistics in order to determine, is this a random event, or do we think that this backtest could really hold up in real life trading? So this really could set people apart, to be able to bring in and use our proprietary calculations in order to avoid the bad times and take advantage of the good times.
How are regulations changing the options space?
We're getting a lot more retail people coming in. We actually steer them away sometimes from 0 DTE SPY, the ETF, towards the cash settled because of these late exercises that can happen on an American option. So just so the viewers know, cash settled indexes are European, meaning they close at 4 o'clock, which is the Eastern time, which is the close of the market. And there are no, that's where everything expires. An American option has the ability for people to exercise it all the way, sometimes right before 5:30 p.m., so an hour and a half after. And now retail, they're not sticking around till 5:30, but the back office of other places are. And we've seen like huge movement afterwards. So I think that's a huge risk to the market. I wish they would do something about that. Close that window down. I mean, there's a lot of things that they could do to make it less risky, but that's the biggest thing. And I believe the NASDAQ has put out a paper on single stock daily expirations, and that's really going to throw things off with earnings. I mean, they're going to try to avoid earnings, but there's still pre-announcements, and there's still dividends, and there's still announcements that happen. So that's going to, I think they have to do something about the exercise rules and to make it, more convenient, more fair to the retail.
Would the industry benefit from changing the pattern day trading rule?
I get that, and I'm a, very advanced trader, and I have different accounts that I trade across. And then all of a sudden I'm seeing this pattern day trading in one of my accounts. I'm like, come on, limits the amount of trades that people can do. They're watching, and with all this automation, you're able to, you want to get in and get out of certain things. It seems so unfair. Like, I hope they get rid of that. Also, what's in front of people are these stop losses. So people, a lot of the automation rely on stop losses. And the SIBO's made some rules, but that's likely to slow down where you could get filled on a stop loss. So I wish they would do something about making a stop loss easier to utilize. But retail and other people have to know that it's difficult. And sometimes if, I traded through 9/11, they closed the market. If you have a stop loss and it's trading here and it goes down to here, you're not going to get filled until way at the bottom if they close the market. So people have to learn how to use stop loss as well. But the exchanges can also help that out.
How is ORATS using AI?
We have Otto, our AI agent. So people could talk to Otto, and it's really been great for support because they're asking all these questions. And then if I see something, we could come in and help Otto out. But we're using that. I mentioned, you have to backtest your strategy. You have to optimize your strategy, and then you have to forward test your strategy. So we're doing a lot of automation and paper trading. So people could, sign up for a strategy, find some optimized signals, and then start to automate it and get text messages and all that as they're going forward to get more, to see what the risks are and to see how much it trades and what type of trades. Those are all types of things with the AI agent to help them find these things and to automate and to paper trade and then to finally automate the implementation of it. We're seeing a lot of automated implementation for retail. It's really being adopted well, and I think that's really is the future of trading.